Hey, what's going on? My name is Amy. Welcome to the channel. I am in month 5 of my day trading journey, and in today's video, I'm pulling out golden nuggets from Market Wizards by Jack Schwager. There's a part 1 to this video. Feel free to go back on the channel and go back into that one, but we're picking up from where we left off. And if you haven't read this book so far, I highly recommend it. If you just want to grab the nuggets though, feel free to stay tuned till the end. But I do have this listed, as well as several other resources that I've used to help me with my day trading in my day trading resources, link down below in the description and in the comments. So let's get into it. We're picking up with the interview of Paul Tudor Jones. Okay, so big name trader. Basically, when I first read this book, I just underlined a bunch of stuff and my goal is to go back through the book, share with you, what good nuggets I pulled from it, and also just kind of remind myself, what I even highlighted here. So one of the things he said was that his mentor taught him that in order to be a good trader to some extent, that you should be a contrarian. So for example, if the market's setting new highs, you might be looking to sell, right? There's a lot of traders who are really good at doing that, like reversal trading. So I think that's a solid idea. He says, never play macho man with the market, never overtrade. So I think from his own experiences, he was kind of highlighting that he had did both and learned his lessons and was, like, let me pass this on. So I think that, that kind of means two different things for people, or can mean many different things about overtrading. Somebody who takes more than one trade a day might think they're overtrading. Somebody who takes 10 trades a day and then one day they take 25, like that might be overtrading. So I think that's a little bit subjective. You just kind of have to know, like, where's your level, right? He said, I decided I was going to become very disciplined and businesslike about my trading. And from the studying I've done so far, the books I've read, the YouTubers I watch, everybody that does indeed treat this like an actual business. And I feel like I know a little better than some people because I have an entrepreneurial background. I've been an entrepreneur for almost 10 years. And there's some very specific things and attitude changes and habits, and discipline is very big, that you will implement owning businesses, right? And to think of trading not like that means that there's going to be a lot of people who have an edge over you, because many people do this for full time and are serious. And I don't mean like you have to be like serious, but just that they take it seriously in the sense of they're willing to do whatever it takes, to learn, to grow, to overcome the challenges, to keep going. Because a lot of times people, I think, that take this not like seriously like a business, they're the first ones to give up. They're the first ones to be like, I tried it, didn't work, a couple of months, oh well, I'll go back to my day job, or they've been at the day job the entire time. And that's fine, like I'm all for build your income, before you quit anything. But if you just have that also as a safety net and you don't really ever give it your all, don't expect it to become your all, Okay, so trading rules you live by, he's asked. Don't ever average losers. Decrease your trading volume when you're trading poorly. Increase your volume when you are trading well. This really goes hand in hand from what I learned reading this book behind me, Best Loser Wins, where when you look into the mindset of high stakes traders, people that do this for a living, people that win big, like the top 10% of traders, this is exactly what they repeat. And it surprises me. I do still sometimes hear of traders who, are really good, but they average down losers. And I think for my purposes, it's always worked better to add to winners, because what happens if you average to a loser? Yes, it may work out. Yes, you may get like your cost per share down. You may end up, bridging the gap, and you can get out, either even or at a profit. But what is that really teaching you? It's kind of teaching you a bad habit that you're chasing losers. And sometimes you can chase losers down to the freaking bottom. And I personally just don't want that habit. So I'm training myself the way I day trade now to add to winning positions. You know, I've actually very rarely ever added to a loser in terms of day trading. In investing, yes. Swing trading, even, yes. But day trading, I am teaching myself new disciplines, new habits, and one of them is we average up with winners, okay? And I learned this first from Ross Cameron. Love that guy. You know, and then it was instilled again in me from the Best Loser Wins book. And obviously Paul Tudor Jones. He says, every day I assume every position I have is wrong. And I think that is just a really brilliant statement, because if you come to the market thinking like, oh, you know, I got into this trade, I'm probably totally wrong. It kind of like relieves the stress of the trade a little bit, because you're okay with losing your predetermined risk. Whatever you had chosen, which you better have done if you're a smart day trader, whatever you had chosen for your stop loss, you know, your total risk amount for the trade, that you are fully resigned to that. And actually, I believe Mark Douglas does a really good job explaining this in the video series he teaches. There's several of these on YouTube. I think he talks about it in the one video I linked in my day trading resources. Again, that's in the description. It's free to access. I know I've heard him talk about it. I'm not sure specifically it's in that video, but you know, he's like basically pointing out that, you know, you if you had the idea that trading is a game of probabilities and that most likely you could be wrong, it kind of just takes that stress away from you. He says, if you are a trend follower trying to catch the profits in the middle of a move, you have to use very wide stops. I'm not comfortable doing that. Also, markets trend only about 15% of the time. The rest of the time they move sideways. So they're kind of asking him, you know, about his specific trading strategies. And it's interesting because you always hear that the trend is your friend, the trend is your friend, you know. And some of these like sayings and whatnot, it's like they can lead you down the wrong path. Because if you think about it, if everybody and their mom has heard the same things in trading, and 90% of the people trading, at least day trading, are losing, you know, they're not successful, they're not profitable, they're not able to do this full time. What does that tell you, right? They're all listening to the same repeated stuff. Not to say it doesn't work some of the time, but again, if it's what everybody else is doing and it's not working for the majority, like, hello. So I think that was good he said that. You know, he's probably more like, let's look for the pivot points and stuff. He's asked, you know, well, the interviewer says, very few traders have reached your level of achievement. What makes you different? And I underlined, what I care about is what I am going to do from the next moment on. I try to avoid any emotional attachment to a market. I avoid letting my trading opinions be influenced by comments I may have made on the record about a market. So don't get stuck, right? Like, I think the idea of being in a losing trade, knowing, you know, having enough sense to get out, and then being willing to just turn around and flip the switch. And maybe you were long on something and then you're like, oh, now I can go, you know, I'm going to go short. Like, just being able to do that mentally and admit that the first trade wasn't right, you know, and you can try again and could be the other direction. Like, that's for some reason like a barrier some people have, you know, they're only willing to go one way, or, you know, they're going to repeatedly try the same way. And maybe they're just like, they're blocked mentally because they just had a loss, and they might be trying to go long again, and they get back in the trade and again it goes against them because they're literally not seeing the signs on the chart, because they're thinking about the past trade they just had and they're trying to make back, right? Just my thoughts. So he's asked about the stock market crash October 1987, and they kind of knew that Monday was the day, because the previous Friday was a record volume day on the downside. So I underlined this just for kind of like future purpose sake, you know, if there's a high volume day and it is down, 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 you know, expect, especially over a weekend, I feel like this from a Friday to a Monday, expect that, you know, there's a big downfall on a Monday. And not to say we're, you know, necessarily in that same position right now, but the markets are wonky. Let's just give it that. Okay, and then he's talking about range expansion. When you get a range expansion, the market is sending you a very loud, clear signal that the market is getting ready to move in the direction of that expansion. So I kind of think when he says range expansion, I'm thinking consolidation. You know how like when you have like a bull flag pattern, you have that consolidation for the flag. It's like, okay, you see that, then it's kind of like, this is the point where we're looking for it to go back, you know, go up again. So this is something I adopted because I like to scalp trade, and I liked that Paul Tudor Jones brought this up. So he says, one of the things that Toulis taught me, which was his mentor, was the importance of time. When I trade, I don't just use a price stop, I also use a time stop. So for my purposes, doing scalp trading, and I like, you know, quick momentum moves, get in, get green, get out. If it takes too long from what I know my average win time is, then it's kind of a sign like, yeah, the likelihood of this playing out like it's supposed to, you know, is probably not there. And because I use really tight stops, sometimes it's just like a, hey, get out now, kind of like, you've been in this too long. Like for me, more than 10 minutes is too long. I'm not looking to ride a wave usually. But yeah, that's kind of, I'll analyze many of my day trades, and they tend to be, you know, if I get a good take profit, somewhere between 30 seconds in the trade up to 10 minutes is like the max. Oftentimes I think it's really, the sweet spot is up to 5 minutes kind of thing. So kind of look at your winners and check that. I try to be diligent about writing the time in and out of trades. Sometimes I'm just moving so quickly that I forget to actually jot it down, but I'll go back and try to review it, you know, and figure it out. He's asked, is the positive intensity of winning as strong as the pain of losing? And he says, there's nothing worse than a bad trading day. You feel so low that it is difficult to hold your head up. But if I knew that I could also have a similar experience in the exhilaration of winning, I would take the combination of winning and losing days any time because you feel that much more alive. Trading gives you an incredibly intense feeling of what life is all about. Emotionally, you live on the extremes. So true. So true. Like up, down, up, down, up, down. Something though that I'm kind of learning to adapt from Best Loser Wins is to be in sort of a neutral state, to teach myself it doesn't matter win or lose, you know, just both ways to feel kind of calm and stoic and even keel, because that just helps you stay clear-headed. You know, you can make better decisions when you're like that. So, he talked about it's always easier to get back in than to get out. So, you know, if you see a trade going in against you, get the heck out. Like, just cut it. Just go. I think that is one of the phrases that day traders hear all the time. You know, cut your losses, let your winners ride. But I think it's underrated because it's not specific enough. Like, when they say cut your losses, like, it doesn't really tell you anything. Of course, at some point you will cut your loss when it becomes too painful and you see how negative you are. But being able to cut it early enough and be like, okay, this isn't going my way. For myself, as an example, I have a time frame, usually 60 to 90 seconds of being in a trade. That trade better be going my way. I better not see it going negative for that, you know, that whole time and not start to turn around after that 90-second mark or so. Otherwise, I just know it's the wrong time to be in that trade. Doesn't mean I was wrong about the direction of the stock. It just means that was the wrong time to get in, because now I'm down, and because again, I use tight stops usually, it's likely going to keep going in that direction of down and hit my stop. So oftentimes I'm just closing the trade out myself, selling at the market, you know, rather than take the full loss of waiting for the stop to hit, which actually has worked out really well for me in the last few weeks. Capping losses, quick, get out, accept it, get out. And really, there's no need to accept it. Just look at what happened objectively and be like, wrong time, you know? And I've really been able to stay consistent, minimize losses. And because of that, I did a video recently of like a recap of my last 20 trades. Because of that mentality that I had started to adopt the last few weeks, I was able to stay profitable over the last 20 trades. And I'm trading very small and whatnot, but you know, I had a streak before that where it was negative, and I kind of saw that, you know, I was taking bigger losses than I was profits, right? So when I started to shift that, and I said, well, instead of waiting for it to hit the stop, which I'm totally okay with it if it does, you know, like if I get in a trade and just immediately, you know, goes the other way very quickly and it's kicking me out, so be it. I'm not like, oh no, I wasn't prepared for that. But if I have parameters, if I have certain guidelines and rules that say get out of the trade if X, Y, and Z happen, then it makes sense. Get out, right? So that was the one interview with Paul Tudor Jones. Yeah, this is a large book, y'all. We are going to be looking into this for some time. I'll keep pulling nuggets out for you. But yeah, I encourage you to check it out on your own. There's just a bunch of great trading advice in here. And he interviewed like people in all sectors, you know, people that traded stocks, commodities, bonds, all different things. He even interviewed, which I thought was a little odd because I don't consider him really a trader. He interviewed William O'Neill, who wrote like How to Make Money in Stocks. He's an investor, if you ask me. But anyways, it's a really good book. And like I said, I got the link to it down in my day trading resources document, which you get free access to. So that's it for today. Hope you enjoyed the video. Stick around if you want to hear more of my day trading adventures, and I'll see you on the next one. Take care.